Okay, in this video, we are going to cover Chapter 7, which is accounting for cash. Remember, cash is the most liquid asset, and it's the first asset that's listed on the balance sheet. We haven't talked about this a lot, but on the balance sheet, we list things from most liquid to least liquid. And so cash is our most liquid asset, or our most current asset. And so cash includes, it can be literal physical cash, checking accounts, savings accounts, and certain investments that are very, very short term. But we're not going to get into too many details. So just think of cash as basically checking accounts or savings accounts. And so on the first page of the notes, I have some terms defined for you. These are out of the book. I've added a few additional things here. We are going to do what we call a bank reconciliation. And so a bank reconciliation basically explains why there is a difference between the cash balance on a company's books and its bank statement. And so we're going to do a reconciliation that helps explain that difference, and then it helps us get our books updated. The bank reconciliation can also help you find potential fraudulent transactions that might have gone through the cash account, but most of the differences are just because of timing. In other words, there are things on the bank statement that just haven't been updated on the books, or things that have been recorded on the books that haven't cleared the bank statement. So again, most of it's because of timing differences. So I have some items defined for you here on this page. I'll let you go back and read through these things on your own as you go through the examples and study. But I want to go down here at the bottom and just basically summarize 2 key points that I think will help with the bank reconciliation. So let's write these down, and then these will make sense as we go through examples. So the first summary point is we're going to swap information except for mistakes. And that'll make more sense in just a few minutes as we go through some examples. And then this is kind of redundant, so this really is kind of making the same point, but I think this is a good way to summarize it. So think about who knows about the information first. So who knows about the information first, and put the adjustment on the opposite side. And I'm about to show you, I'm about to explain to you what that means as we go through a bank reconciliation example. Okay, on the second tab, I just have basically a generic template that you might want to use to go back and study a little bit later, but we're going to jump into example 1. Okay, so we have the following information for ABC Company for the month of September. The bank statement has a balance of $4,436, but the book balance is $3,200. So we have a difference between what the bank says and what the books say. And again, most of that difference is just because things are not updated on both sides at this point. So we're going to come down here in our template and fill in the bank balance and the book balance. So $4,436, and then the book balance $3,200. Okay, number 3 says we have an EFT deposit. That stands for Electronic Funds Transfer Deposit. That's defined for you on the first page. So we have an electronic deposit that came into the bank statement for monthly rent that we receive from a tenant, and it's implied, but we have not yet recorded that on the books. So I said basically we're going to swap information except for mistakes. And what I mean by that, the bank already knows about that information, or they knew about it first, and that $1,800 deposit, it is already reflected in the bank's number. It's our books that are not updated. So we need to put the adjustment on the reconciliation under the book side, and we're going to add rent revenue, $1,800. In other words, it was the book balance that was not up to date regarding that transaction. Number 4 says the bookkeeper accidentally recorded a $50 check as $500. So the check was to settle an account payable. The check itself is correct. The bank processed it correctly. It's just we made a mistake on our books. And sometimes it helps to think through this by making a journal entry. So I'm going to think about it like this. Here's what was recorded. And let me fix that real quick. There we go. Okay, so what was recorded? And we had let me move that real quick. Okay, so what was recorded? We had a debit to accounts payable for $500. And we had a credit to cash for $500. So that's what we recorded on our books. What we should have recorded is a debit to accounts payable for $50, a credit to cash for $50. So in other words, we recorded this transaction and it's $450 too much. By crediting cash $500 instead of crediting cash $50, we basically took out on our books. Again, everything is correct on the bank side, the check itself, and the bank processed it correctly. But we took out $450 too much on our book side. So we need to add back that difference. So under the book side, where we have add, we're going to put book error $450. Okay, number 5, we have $50 in service charges. Again, who knows about that first? The bank knows about it first. That $50 service charge is already reflected in the bank balance, so it's the books that are not up to date, and so we need to subtract that. Next, number 6, we have 2 checks that have not yet cleared the bank. So when we write a check, we know about it first. So we're assuming that when we write a check that we know about it, that check is automatically recorded in the books. So that those 2 checks are reflected in our number, our book balance. It's the bank that's not up to date. So once the bank processes those checks will be deducted from our account. So on the bank side, we need to subtract outstanding checks. And so we have check number 100 for $260 and check 101 for $285. And then number 7, we have a deposit made on September 30th that didn't appear on the bank statement. So when we make a deposit, I mean, really, we know about it and the bank knows about it at the same time. But what we're saying is we are already recognizing that deposit. The bank hasn't recognized it yet. So it could be a couple of things, such as the bank statement was already prepared that morning and we take a deposit late in the day and they just didn't have time to get it on the September bank statement. There could be a check hold. If it was a large enough check, our bank might not want to consider the money in our account until whoever gave us the check, until their bank verifies that the cash was actually there. So we're assuming that when we make a deposit that we record it immediately. It's just this particular deposit has not yet been processed by the bank. Once the bank processes that, they will add it to our account. And on our reconciliation, we need to add what we call a deposit in transit. $12.50. And then our last item, number 8, we have a non-sufficient funds check. So this would be a scenario where somebody gave us a check, we made a deposit at the bank, but then when our bank tries to process the check, they find out that the customer doesn't actually have the money in their account. So again, who knows about it first? The bank knows about that first. They would immediately reflect that information in the bank balance. It's the books that are not up to date. So we need to subtract on the book side a non-sufficient funds check for $259. And so if you go down at the bottom, we have now balances that agree with each other. And this is what we call our reconciled balance, or the adjusted balance, which is the amount that should go on the balance sheet. And just to be completely clear, the way I got those balances, so on the bank side, I'm going to type equals. I did the bank balance plus our addition items minus things that need to be subtracted. Hit enter. Same thing on the book side. We had our book balance, add our addition items, subtract items that need to be deducted, hit enter. And again, that's our reconciled or adjusted balance, which is the amount that should go on the balance sheet. And I'll stop the video here, and in the next video I will pick up on the journal entries that we need to do to update the account.